If you are new here, welcome. My name is Lindsay Lehr. I'm the Managing Director of Payments and Commerce Market Intelligence. We've been holding these coffee chats regularly for a number of years now as a way to invite our community to connect over trends and insights and mutual learnings across the payments industry. Most of our background and foundational knowledge comes from Latin America, but as many of you know, more recently, we have expanded our scope of work and are really focusing on global payments and trends that impact payments in every region across the world. So thank you for joining us. This is our April edition, and we will be focusing on the ISO 20022 migration today. We touched on that briefly last month, which was kind of about various topics related to cross-border payments. Today, we're really going to dive into this ISO migration, which is going to impact almost everyone across the industry. So I'm excited for this conversation. Let's move ahead just with some very quick guidelines to make sure everyone knows how we can execute an excellent session today. Please remember this is being recorded. It does get published to our PCMI YouTube channel. So just keep that in mind when participating. That being said, this is an open forum. This is not a webinar. We do have some presentation slides today, but as you all know, we encourage your active participation with questions, comments, feedback, and sharing your perspectives. You're welcome to jump in. You're welcome to raise your hand with a little emoji. You're welcome to use the chat to ask your questions, and we will generate a very interesting conversation. Okay, so let's go ahead and we will introduce our esteemed speaker today. I'm so pleased to welcome Renata Vilanova Lobo, Managing Director at JP Morgan, and an expert in this topic who will be guiding us through what ISO means for the industry. So welcome, Renata. Thank you so much for joining us.
Thank you. Delighted to be here. Pleasure.
Tell us a little bit about your background, where you're coming from, how you're related to the topic, and then we'll just dive in to the content.
Sure. So I'm Renata Vilanova Lobo. I'm the head of the global clearing at JP Morgan. That means I'm responsible for all the cross-border payments processed by JP Morgan. We clear about $10 trillion a day, so it's massive. I've been with the bank for 13 years now based in New York, but I'm Brazilian. So I spent 10 years running payments or within the payments team in Brazil, building local capabilities. And about 2.5 years ago, I relocated to New York to run this global team, the global clearing. And since then, I've been highly involved in driving the ISO 20022 migration at JP Morgan. So this has been a multi-year program, lots going on, and more recently, lots of new MIs or market infrastructures going live. And in fact, today we're just going live with CHIPS, which is one of the most important clearinghouses in the US. So timing is really good. So I'm excited to be here. Lots to share, and happy to go through questions and also, provide lessons learned about our own journey with ISO 20022.
Oh, fantastic. I can't wait to hear what you have to share with us. And I think most of you by now know Cesar on our team, Cesar Borelli. Hi, Cesar. Thanks for joining us. Cesar will be walking us through, helping us moderate today. So I'll turn it over to you, Cesar, to get us started.
Hi, Lindsay. Thank you very much. Yeah, I appreciate the time, and it's good to be here again. So Sully, let's just jump into it. So I think just to introduce you to the topic and why I think this is so relevant. Right, I think we all come from a process where banking has evolved a lot on the user experience side. And as we evolve on the UX side, and as the industry has come up with real-time payments and instant payments and everything becoming more online, there is a existing and growing need for better infrastructure, right? I think all the traditional and even the fintechs are heavily investing in infrastructure. That can be a lot of things, but when it comes to payments and supporting payments, like Renata said, the volumes are sizable, and the risk of processing a wrong transaction from a compliance standpoint or crediting the wrong beneficiary from an operational standpoint, it's very complex, right? It's very complex. It's subject to a lot of fines and audits. So it is a very complex business. Everyone that has been with banking for quite some time can understand how risky is treasury management and cash management. It can be riskier than credit or other products that usually come first to our mind when we think about risk. So the next slide, Sully. So just to put in perspective here, so ISO is a very well-known organization. Many of you have heard about ISO for different certifications, quality management, the different numbers after ISO. But the ISO 222 is an initiative heavily focused on the financial industry and how banks will support the data behind the money movement, and this is especially important when it comes to data, right? To give more context around those money transfers, giving a standard for how banks will exchange the data, will understand data from like beneficiary address to the payment related information, invoice number, and all those things. So it's not the money movement. There's a lot of complexity around the money movement, and the ISO was created to support all this growing need for data, and especially standard data, so banks are able to process that faster, to process that without manual interventions, supporting that with optimized reconciliation features, supporting that using automated tools such as AI. So the benefits are almost endless, but I think that was my own introduction. I will hand over to Renata. She has a lot of great intel and information to share with us. Welcome, Renata.
Thank you so much. All right, so I think the focus of today is to go through why ISO 222 is so important, when this is happening, and how this is happening, right? So I think we can move on to the next slide, please. So I think that when it comes to ISO, I think this is the 222 standard is probably the biggest payments change over the last 30 years in the financial industry. It's really the new international standard for financial messaging, and it defines a standardized message structure to be used between FIs and other entities operating in the payment space. And I think the main objective of ISO 222 is to improve communication, transparency, and speed of payments activities. So when we think about the G20 targets, like to create payments that can be faster, cheaper, safer, and with more transparency, I think ISO is really the foundation of that. And as we see, real-time payments emerging pretty much everywhere, right? So every continent has an initiative related to real-time payments. And this is booming. We see this with Pix in Brazil, India, in Mexico. So I think customers' expectations in terms of what's happening in the domestic space is now putting a lot of pressure on the cross-border space, right? So everyone expects to have a very similar experience in the cross-border payment space. And I think ISO is really the foundation to get there. So a couple of key changes, as we adopt the ISO 222. So we're coming from, and this is more technical, but we're coming from an MT type of message to an MX type of message that is a structured message with predefined information fields, right? So instead of having one single string with tons of information all together, we now have a very predefined fields of information. So it's a lot easier for us to understand what that piece of information is related to and how we'll be treating that. I think this is key, especially now with AI and machine learning, right? So we've been going through a lot of new initiatives with machine learning and AI that has been a lot more effective, now with ISO. So the machine is very precise towards where, looking for that information. So there are also additional fields allowing for more information to be included in a payment message. So that means that we can have more information about, those transactions, which can be also very important in terms of AML controls, screening, fraud prevention, and not to say multiple possibilities in terms of new solutions. I think that these fields can really open new worlds of possibilities for anyone involved in the payments today. But it all depends upon adoption, right? I think this is something that it's key, and it's been a challenge. So the ISO migration is mandatory for all FIs that are connected to SWIFT. And by the end of 2025, all FIs must be operating the ISO standards. I think by now the expectation was that 80% of the FIs across the globe would be ISO native, meaning they would be sending and receiving ISO MX messages. Right now we are at a range of 20%, so it's a lot lower than we expected. And I think the main reason being the complexity of this migration, right? So it can be, it might sound simplistic when we say it's just migration of an MT to MX, like structured data, additional fields. But in reality, when you get into the technical aspects, it's quite complex. As I said, at JP Morgan, we've been running this program for over 3 years now. And it's been quite complex. So I think the complexity has delayed, adoption, but the expectation is that by end of 25, pretty much all FIs will be running on ISO. And that means that 80% of high value payments will be using ISO, will be processing through ISO message, which is fantastic. There is now a coexistence period in which a translator can be used for banks that are still running on MT message, so they can receive MX messages even though they are not on ISO yet. So this translator has been created by SWIFT and is available to all FIs until end of November, end of 25. Later on, expectation is that the translator will continue to be a possibility, but it'll be charged at a high cost. And there are many limitations with respect to this translator. So this it was intended to be just a tool, considering that banks are not all on the same timeline for the ISO migration. But adoption is key. And I think, we'll talk about all the benefits we expect from the ISO 20022 migration, but those benefits will only materialize if the banking community really embraces the new standards. I think this is critical, and that's why it's so important that we embrace and we acknowledge, what that means. And this is not only for financial institutions, right? So I think for all entities connected to SWIFT, this will be at some point mandatory, including FIs, non-banking FIs, meaning fintechs, or other non-banking FIs, and also corporate entities that are connected to SWIFT. So there's a lot going on, as you can see, and many benefits that go beyond just, the technical migration.
Renata, just a quick question. Is there any specific penalty imposed by SWIFT for non-compliance or non-migration, or is it just kind of the result of maybe not being able to transact as easily with the community?
Yeah, so I think right now, as I said, the translator is available, considering that not all banks have the same timeline. And it's free of charges towards until end of 25. Expectation is that after that, very likely in 26, there will be a cost to use the translator, which will be quite high. So I think, from a cost perspective, there will be some type of either a penalty or a higher incentive for FIs to adopt ISO. Not to say the risk of truncation, which is quite high, considering that, like additional information will be flowing through Swift. And if you have a limited MT and you get a lot of information, the translator will be limited to how much information it can translate into the max message. So I think truncation risk is a big one, not to say efficiency, right? So I think that in that sense, banks will be quite impacted if they continue using the translator later on.
I have a question. Is this going to be applicable to the card processing networks? I mean, it's one thing dealing with Swift, it's another one dealing with a Visa card process.
This is a really great, really good question. So the answer is yes. So the ISO migration is mandatory for all FIs connected to Swift, and will be later on to non-banking FIs and corporate entities connected to Swift. However, many of the card entities are already adopting the ISO standards. So I think this is great news, as we see that interoperability is a key challenge today when it comes to processing cross-border. So I think adopting the ISO standards, not only for Swift messages, will also help us to get to more interoperability. And the cards schemes are adapting or adopting ISO 222, which is great. Also APIs. So most of the APIs, being developed across the globe are now following the ISO standards.
Yeah, I mean, I certainly see the value for new systems and for APIs. And even if Swift is doing it, but you got an established massive card network. That's the world I'm from. And is there a Visa mandate for those transactions to go to this new standard? Because that can take 6 years to implement.
So it's not mandatory, but Visa and MasterCard are already working on the ISO standards. So in that sense, they see the value, and they are building the new rails already, looking to the new standards. So I think this is a way to improve, interoperability, and also leverage the new information or additional information that will come through the ISO messages.
No, I like that. I mean, you're going to have the big banks, different systems are going to be at different stages of transitioning over to the new standards. But the card processing, that's going to take a long time before that one's done.
It's quite complex, I have to say. But most of the banks adopting the ISO, I think, will help. You have many tech providers also available today, to help with that migration. That entities are also leveraging non-banking FIs and corporate and also card entities. So I think that will become even more available in terms of supporting the tech migration.
Okay. So is ACI has done that, integrated that into the newer versions of Base 24? Do you know?
I don't know. This is a good question. I'll follow up on that.
And Renata, to that point, so when we talk about card networks, right, I think we have the first aspect, which is cross-border settlement, right? Like all those international card transactions, they need to be settled. And for that piece specifically, I understand that both networks will have a banking sponsor, right? Most of the networks will have a dollar clearing account, so they can clear those transactions. And that ends up being ultimately processed by a bank, right? As I think same thing as when we discuss fintechs. We have a lot of fintechs working on the cross-border payments, but most of them will work with a bank. A lot of them will work with JP Morgan in the back. So as long as you are compliant, I think the whole ecosystem becomes compliant, right?
Yeah,
exactly.
It's just it's a different system authorization as opposed to settlement. Settlement, absolutely, I can see that happening really quickly, and I think this is great. The authorization part, that might be a decade. Kicking and screaming.
I agree. Yeah, or even domestic, right? I'm not touching about like domestic settlement. I think that can be very specific to each country as well. But kind of like starting with the cross-border use case, which I think it is the priority if you take Swift in the picture.
And this is what we are seeing. So when it comes to Master and Visa, for instance, when you think about paying to accounts, definitely you need a bank behind the scenes. So they will be taking advantage of the banks that are going through this migration now. For paying to cards, I think this is what we are seeing. Like an involvement or coming from Visa and Master that are adopting the ISO standards, not because it's mandatory, but because they see the value of it. So in that sense, I think this is evolving pretty fast.
What's interesting is that developing countries are going to be a driver for adoption of this because they don't have legacy to deal with. So I'm liking this.
No, I actually disagree with you on that. Yeah, so I think most of the large global banks, they still operate on legacy systems. And that's why, when I mentioned that by now, expectation would be that 80% of the banks would be running on ISO already, and only 20 is due to the complexity. The technical migration proven to be quite complex, and many and a lot of that comes from banks running on legacy systems. So I think this became quite a challenge. It's different when you have like a digital bank that's operating in a very modern platform, cloud-based. I think it's simpler to implement ISO for those banks than for global banks. That is a combination of multiple legacy systems, So that's what we have seen since last year. So we are looking at the timeline, right? So the first implementation is started last year. So multiple countries, especially in Asia, that's when we started. The biggest one was definitely the CBPR Plus, which happened about a year ago in March last year. That's in Europe. That was the largest one. And that's where we got a lot of pushback from large banks, global banks, due to technical complications, and especially because they were running on legacy systems.
Which also is funny, I guess, because like most of the new RTP schemes are running already on like ISO or like another type of XML, right? Like PIX, UPI in India, they are both based off ISO or type of XML.
Yeah, so this is another great point. So I was saying that, as we see RTP raising pretty much everywhere, and expectation is that the same customer experience we have in the domestic space will then be available in the cross-border space. I think the good news is that RTP in pretty much most of the countries are coming with some type of ISO standard. So that will help as we think about, connecting domestic payments to cross-border payments. So I think this is what we expect in the near future. All right. So, and in fact, talking about a timeline, I think it's also good timing to have this conversation. So as we speak in the US, we're just going through the CHIPS migration. So this is one of the most important clearing houses in the US. So today's day one. I spent, the whole weekend with my team on site, just going through this migration. So since Friday night, that's when we started, changing the code, and it's looking good so far. But this is a key milestone in the US, and early next year, the Fed will then go through its migration. So it's coming. I think we are halfway through, but again, as I said, adoption is key, and we do expect to see more banks, adopting ISO throughout the next few months and year. All right, so
I got a question on migration. We've talked to, specifically in Latin America, when we've talked to a lot of banks, especially mid-sized banks or smaller ones, a lot of them say, oh, we haven't prioritized this, we haven't started this. So can you speak to why that might be, and you know, how long does it take for a mid-sized bank to do this, and how likely is it that they'll meet the deadline? Can you talk about, you know, who are the ones that are already, you know, well on their way? JP Morgan, of course. Is it other large global players? What's the adoption curve like so far?
Yeah, this is a great question. I think as we see, you know, the timeline, I think LATAM is actually the last one in terms of defining mandatory due dates for the migration. So we only have Chile that has already defined the Q3 of 24.
Is that done at a country level, or who defines those deadlines?
So the central bank of each country defines.
Got it.
Yeah. So we only have Chile in LATAM. I think the reason being most of the, I mean, again, domestically speaking, most of the countries operate with their own standards, right? So this is already happening. I think there's a huge focus on launching real-time payments domestically. So most of the banks have been highly engaged on building their own RTP rails domestically. Tons of investments on that. And also, you know, central banks have been very, very busy and focused on that. I think as, you know, RTP becomes pretty much a reality, most of the countries in LATAM will see a shift towards cross-border payments. And we'll see, you know, more support coming from central banks, kind of pushing the industry to adopt ISO and defining due dates for that. So, in fact, I'll be in Brazil towards the end of May with SWIFT. So I'll be speaking at a conference about ISO migration. So when it comes to global banks operating in LATAM, I think most of them are pretty much going through the migration as we speak. I think the local banks are the ones that will need to embrace this initiative pretty soon.
Yeah.
I think planning is key. So the sooner, you know, they get started, the better. When we think about the end of 25, it seems like, oh, it's still, you know, there's still a lot of time to go through it. But yeah, planning and testing is massive, right? So I think the key message or the key advice I would give to those banks is you should get started now, right? So getting your dedicated team, you know, planning ahead and looking through all the testing cases and the infrastructure that's needed. So this is massive. So I think the time is now. But I agree that, you know, across the globe, LATAM is quite behind.
Why do you think that is? I mean, we see other developing markets like Philippines, Thailand, who are, you know, far ahead of LAC. Do you have a hypothesis as to why Latin America is behind?
I think, again, because the focus has been so much on developing real-time payments domestically, and that competes directly with resources, right? So
Sure.
We all have limited resources in terms of money, technology, people. So I think, you know, as we see what's happening in Brazil with Pix, you know, that drives, I mean, that requires a lot of people, you know, behind the scenes investments. And even from, you know, the regulators, huge focus on defining how this is happening, all the rules behind it. So again, I think that as we see this evolving and ramping up, I think that the central banks will now shift attention towards cross-border payments and will, you know, tag along with what's happening across the globe, following Chile, you know, and defining new target dates.
Renata, quick question related to that. So correspondent bank is a huge business globally, and a lot of the local banks will rely on the big clearing banks like JP Morgan, Citi, Bank of America to clear those transactions. Do you think that eventually like a decision on migrate or not from those big global players can change the market share for correspondent banking as a whole? Like, can a bank in Latin America or somewhere else decides to change the clearing provider based on having a faster provider, cheaper provider? I don't know.
Yes, I think The answer is yes, and we are seeing this happening, right? So at JP Morgan, seeing some new clients, coming to us because they are local providers or they are regional providers that were supporting them on the cross-border payment space was not ready for ISO. So some concerns coming, in respect to efficiency, security, fraud prevention. So we are seeing this happening already. And I think as we get closer to the due date, as I said, leveraging or relying on the translator can be quite risky in terms of truncation, in terms of operational inefficiencies. So I think banks will likely choose providers that are ISO native by now, and seeking for faster, cheaper, safer payments.
Great.
All right, so let's move on and just go through like the key benefits of the ISO migration, right? So when I think about the key benefits, I see those benefits in three main dimensions, right? So I think it comes initially with the operational resilience and efficiency. So by operating with a very structured type of message, this can allow for a lot of automation. And this is what we're seeing. And now combined with AI and machine learning, this is the perfect combination. So now you have more structure for the machine to learn and to use. And this is something that we are seeing at JP Morgan, as I said, since last year, as we've been adopting ISO in every single market infrastructure. We are seeing automation being a lot more effective. So just to give you a couple of numbers, we have grown 60% on volumes in the past 5 years. And just last year, our STP, straight through process rates, increased significantly as a result of leveraging ISO structured data and AI and machine learning, right? So just as an example, auto repairs, right? So if you think in the past, a payment that might be related to your scuba diving vacation, so if it had the name scuba diving on an empty message, very likely that payment would have been stopped for investigation, right, as a false alert. So that means, your payment would be stopped. Someone would be looking into it to then realize, oh, it's not Cuba, but it's scuba diving. But because they're on an empty message, there's no structure. The machine doesn't know whether that is Cuba, the country, or another word. So now with the new standards, you can have scuba diving included in the purpose of payment, right? So in that sense, that payment would not be stopped because it's not the location, it's not related to the address. So we have reduced 80% of our false positives since we implemented ISO. So this is huge, right? So that means that many of those payments are not being stopped today just as a result of the new structured message. So this is a key benefit in terms of operational efficiency, not to say AML, fraud and sanctions, right? So we think now we have a lot of people really focusing on the real alerts as opposed to just cleaning false positives. So I think the operational resiliency and efficiency is the dimension where we'll see most of the benefits in the short term. And this means, faster payments that hopefully will drive, cheaper payments. So I think this is the first dimension. I think what we'll see next is benefits around product enhancements. So with more information and more structure, I think new solutions will come combined with automation. So one example is automated receivables matching, right? So the ability to really have reconciliation happening automatically. So with the ability to match a feed of incoming payments to an invoice detail, right, provided by the SAP engine. So as a result, you get reconciliation automatically. So this is huge when it comes to cross-border payments, right? So when you think about a bank or corporate clients sending thousands of payments daily and having that reconciliation happening pretty much throughout the day automatically, that's huge. And even if you have one single payment for multiple invoices, now with the structure message, you can make that happen automatically. So this is another solution that we are seeing as a result of ISO. Similarly, as many corporate entities are adopting virtual accounts, I think the virtual account reconciliation can also happen automatically and in real time as a result of the new standards of ISO. We are seeing more development on real-time dashboards, right? So you can provide and customize different dashboards according to client needs and leveraging more information, right? So when we think about ISO, it's not only about the structure, but also the additional information that's coming with payments. So that can create additional dashboards in terms of providing information in real time, not to say customized reporting and solutions. So more to come on the product enhancements. I think that the early birds like JP Morgan, are now looking into this dimension in terms of new solutions that we can provide, leveraging the additional data and the structure. And then later on, I think the third dimension will be the power of data, right? And I think this is really the biggest, potential of ISO. So there are many new data fields, and some of them mandatory, some of them not mandatory. So depending upon how they will be used by the industry, I think this can really unlock the power of data and open doors to many new possibilities in terms of customization and new services. So it's really about defining, new client behaviors, really getting to knowing your customers, and based on that, creating, very customized offering, customized solutions for those clients. So I think this is what will come more in the longer term, but most of the corporate clients are actually looking to that as they see a huge benefit in terms of the additional information that can come as a result of the ISO adoption.
Renata, thank you for those examples. That helps me at least really get excited about this, right? What you just described is actually, getting me excited about the implications and the possibilities. A question I have is, it sounds like there's a lot of opportunity for service providers, right? Doing reconciliation, doing business services, AI companies, helping to manage data. Who do you expect are going to be leading in ISO related innovations? Is it like the SAPs and the Oracles of the world? Is it new fintechs or fintechs specifically dedicated to this purpose? Are banks themselves developing services related to, data, this new level of rich data that you have available? Where do you see that moving most quickly?
We see opportunities across multiple segments, right? So if you think about large banks, so the amount of data that those banks like JP Morgan have, it's massive, right? So if you can really leverage that amount of information, create intelligence out of that, I think that this can be really meaningful. And as you create new intelligence and you improve your existing services, you create new services, you actually sell that data to your customers, right? So I think this is what we're seeing coming from most of the large global banks. But at the same time, as we think about corporate clients, for instance, I think there are many fintechs that are really focused on certain segments, so they can really understand, like looking at additional data fields, what type of information we can collect from those payments, and what does that mean to corporate entities, and what type of services can be provided by leveraging that additional information. So there are many fintechs that are really focused on, the corporate entities and leveraging the additional information to create new, very customized solutions. And then the tech providers, definitely, as I was saying, many banks are leveraging those tech providers to go through their ISO migration. So instead of building everything from scratch, they are leveraging what SAP and some other providers are building. So the technical migration can be simplified or somehow not built from scratch, right? So I think in that sense is just reducing the amount of build out you're doing internally. So I think that multiple segments are leveraging ISO, and there are multiple opportunities all across.
Mm-hmm. Fantastic.
So I was saying adoption is key. When I look at ISO, I think it's a lot more than a technical migration. And that's how I think, most of the financial institutions, non-financial institutions, and even corporate clients should be looking at it. Indeed, the operating in the payment space has become quite challenging, considering, the amount of new players, competition is increasing significantly, has been increasing the past few years. The regulatory framework is becoming more and more complex. So more and more investments, requirements. So it's becoming more expensive and more complex. So when you think about mandatory initiatives like ISO, many banks complain about, the amount of investments, amount of money, resources allocated to this. But when I see an example just like ISO or many other, regulatory initiatives, I think banks should be looking at those as an opportunity to do more, right? To optimize the investment. So as I was saying, you can go through the ISO migration and just do the minimum to comply with, reading and receiving an MX message. But you can do a lot more, and with a marginal additional investment to leverage the incremental information and create intelligence, improve your solutions. So I think this is how we should be looking at ISO 20022. So with more strategic lens, as opposed to just a regulatory mandatory initiative. And I think, that applies to many other regulatory requirements. So it's really optimizing the investments and the resources allocated to those, right? So you can say RTP is the same thing, right? So you can create so many new functionalities on top of a real-time payment that can differentiate yourself, among the other players. Same thing with open finance. So I think more and more, that's how we are seeing the industry embracing those regulatory mandatory initiatives to create some differentiators on top of it. So it's really designing new solutions and driving new business, creating new customer demand, and increasing competition. So I think this is what we're seeing.
Renata, it says on number 1 here, don't map. Can you describe? I love it when slides say don't do something. Can you describe that a little bit more?
Definitely. So I think initially when we started going through the migration, the term that we were hearing was like for like, meaning whatever I receive, I'll pass along. So it'll be a like for like. So I will not proactively leverage or use the max message. I'll do whatever, I receive. So that was a very limited approach that many banks chose to go with. But I think that was just to simplify the migration initially. And as I said, the complexity became proven to be, the complexity proven to be a lot higher than initially expected. So there are still many banks that are, just receiving MX, but just sending MT yet. And this is why, the translator is being used. So banks that are not ready to send and receive MX messages can use the translator. So the like for like, I think, will eventually, reduce, and most of the banks will go ISO native, meaning everything that they are doing is on an MX message with the new standards. So this is what we expect to see. And again, as we went through, all the operational efficiency and benefits that we expect to have in terms of resiliency, fraud prevention, screening, I think banks that are using the translator will be quite behind, and it will become visible to customers in terms of the customer experience itself, not to say cost. So I think the like for like, or just the mapping type of approach, will be very temporary, and hopefully by end of 25 we'll see most of the banks ISO native.
Got it.
And we are talking about, end of 25 mandatory for banks, but that doesn't mean that corporate clients or non-banking FIs cannot migrate, before that. So we do see, corporate clients, large corporate clients that are highly operate in the cross-border payment space, directly connected to SWIFT, already migrating, as we mentioned, the card schemes, many of the large, card comp entities also adopting the ISO new standards. So it's mandatory for FIs towards the end of 25, but that doesn't mean that other entities cannot go through the same migration, before that. On the next slide, I think you have, it's quite technical here, but I think as you were saying, like the like for like, and the changes in terms of the structure. I think it's very visible here, how we are operating today with an MT format, quite simple. Everything is all together in one single string. So unstructured data that can be quite inefficient when it comes to, identifying pieces of information. So this is how we've been operating for the past, 50 years or so. That now with the new structure, you have, fields for all for different pieces of information, additional fields. So that can really increase transparency and speed, efficiency. So this is what we are aiming at as banks, become ISO native. And you have on the right, the hybrid structure. So in between, as we move along to the full ISO native, you might have a combination of limited fields, but already structured, and then you start adding the new fields with additional information. So this is what we see in terms of the ISO migration and adoption. But again, I think it's quite technical, and it's pretty simplified here, but it does require a lot of technical enhancements and build up.
Mm-hmm.
Hey, Renata, I imagine when you talk about complexity, it's also because a lot of the different systems that are feeding information to the ISO are also legacy, right? So if you're trying to capture the address from your specific client before sending that to ISO, and your specific system to register, to have that register and to have that address doesn't differentiate the street name and street number, for example, it will be hard for you to do that split before sending that to ISO, right? Is that a correct assessment? Or?
Definitely. And that was the example I gave about scuba dive in Cuba, right? So with the MT message, you cannot differentiate because that scuba dive word is part of that long string, right? So you don't know if that's part of a one single word or the address or something else. So with the new standard, it's clear that this is not part of the address, but it's part of the purpose of the payment. So this is a huge difference when it comes to screening and monitoring for AML sanctions. So a good example is when we went through the Russia-Ukraine situation, we were not on ISO yet, and that was a huge challenge, right? So every day we had new sanctions being issued. So we were all, the banking community was all operating under the MT structure yet. So that means, that every single news sanction would need to be manually implemented because it became effective pretty much on a daily basis, right? So new sanctions being issued effective immediately. So because we didn't have the structured message yet, that was being pulled, manually from that long string, because those sanctions were so complex and very detailed, but we didn't have the structure, to make that happen automatically. If the Russia-Ukraine situation were to happen now, I think it would be a lot easier and faster for banks to apply that automatically, leveraging the structure of the message. So this is another example, and I think as we see, a more global and the geopolitical environment becoming even more complex, I think leveraging the structure to improve or to strengthen your AML sanctions framework will be key.
Mm-hmm.
Not to say fraud prevention, right? So you can really improve the way you are mapping your customer behavior. So you can be a lot more precise towards defining, AML alerts, very customized, because now you know the purpose of the payment, where that payment is usually coming from, where that's going to currency. So it can be a lot more effective in creating, very precise customer behaviors and reflecting that in fraud alerts. So this is also something that we are seeing as we speak as a direct result of applying ISO.
I love this visual example because it really brings it home. Having separate fields for different components of an address feels basic, like a basic requirement, right? And so this just shows how, how much progress that we need to make in actually having standardized data, and just how I think it helps break the assumption that this is easy, right? That, of course you should have separated fields for name, address, and postal code, but no, that in reality, that's not how the system has been operating. And we've had in our country, and you're trying to enter in your address proper fields for your actual address. It's a very common challenge. And so imagine that at the global scale with these huge, massive institutions. I just think this is such a beautiful example to really break it down and to show how simple, on the one hand, we need to solve what seems like a very simple problem or a basic problem, but that the actual solution is immensely complex. So thank you for bringing this visual.
Yeah, I was about to say the concept itself seems very straightforward, right? But again, going back to my comment about legacy systems, I think because most of the banks operate on legacy systems, still different formats, different standards across the globe, going through one single standard format or migrating to one single standardized format means a huge effort from a technical standpoint. So I think, the industry has been kind of postponing it, for the past, 10 years or more. Now I think it's, it's clear that this is the time. And if we think about, achieving cross-border payments in real time, you need to operate with one single standard, right? So one of the key challenges we have in terms of real-time cross-border payments is the lack of one single standard. So achieving interoperability, and allowing to connect a real-time payments to a cross-border payments needs a common standard. So I think this is what we expect to see as ISO becomes a reality. We'll finally achieve, at least more interoperability across the globe. So cross-border payments can happen pretty much real time.
Question, Renata, on the cross-border and the interoperability, because my understanding with ISO 20022 is that even though it's a global standard, there's still like all these variations on how it's implemented. And like, I guess maybe there's still translators that are needed even between ISO 20022 messages. I guess, do you have a perspective on that?
Yeah, so there are multiple variations of ISO 20022, right? So as I was saying, we have different MIs, market infrastructures, defining its own standards, but that means that the foundation is pretty much the same. The additional fields might be different, right? So I think that's, that's how different locations and market infrastructures are creating different flavors, but the foundation is all the same. So that means that they can connect and they can talk to each other, creating that interoperability, which is great. I think the translator, as I mentioned, is a tool that's available today because not every bank will follow the same timeline. So you still have banks, fully operating on MT messages, but they need to be able to receive MX messages. Otherwise, you break the chain when it comes to cross-border payments, right? So the translator is just a way to allow for banks to migrate, within a large window, which means 23 until end of 25, without breaking the chain. But eventually, after 25, the expectation is that most or pretty much all banks will be ISO native. So you can eliminate or remove that translator, which also comes with some limitations.
I guess thanks for just to clarify though. I mean, I guess like I understand like the translator is helpful for like the old format to the new format, but like even within the new, like I guess sometimes like even though this is very straightforward, like we're seeing in the code, that my understanding is like addresses, like they might leverage different address codes for the same like an address for a customer might be placed in different places. I don't have hands-on experience. I can't give you specific examples, but having talked to people who do ISO 20022 stuff, they say like, with one country or payment rail, they might be using it one way. Like even with our US one with the FedNow versus the clearinghouse, like they're both built on ISO 20022 standards, but they're not compatible, I guess. There's not like
as we were saying, that is also an opportunity for many fintechs and some tech providers, to create some tools that will allow us to connect all the different ISO versions, creating additional functionalities. So again, those messages will be compatible regardless. But to your point, if we want to really leverage the additional fields or the additional information, we might be leveraging new translators or connectors, so we can be precise towards, like the piece of information we're pulling from each of those MX messages. So I think it'll be just there will be new tools for us to better leverage the incremental information that will be flowing with payments.
Makes sense.
Anna, we're just about out of time. I want to make sure you have is there a final slide you'd like to end on, or any, key final takeaways you'd like to share?
Yeah, no, I think the key advice is, the time is now. So if you're part of a financial institution and you have not started on the ISO migration, I think this is something that you should be raising internally. The time is now, planning ahead, testing is massive. So it's quite technical and complex. So you should get started now. If you're part of a corporate, large institution, non-banking FI, you should start thinking about it and, planning ahead, even though it's not mandatory in terms of timeline. I think the benefits are huge. And there are tons of lessons learned, coming from early birds like JP Morgan, so that you can leverage from. So I'm happy to connect, and share our lessons learned, what we have been through, and things that we perhaps would do differently if we were to get started now. I think, again, the success of ISO relies on, adoption. So we are very keen on seeing other, entities succeed on this, so we can all, take advantage of this, of the benefits coming from ISO 20022.
Well, and you shared some terrific examples on the benefits that your institution has experienced so far. So thank you so much. I
and
really
there are a couple of links on that page with lessons learned, some white papers we have issued, so tons of technical examples. So and this is public, so more than happy to connect offline and with anything that's provided in terms of the content on those links.
Excellent. Well, thank you so much. Again, for everyone, this will be shared on our YouTube channel, so you can access these resources. You can connect with Renata directly on LinkedIn. You can also connect you if you'd like to be in touch directly. Sully, can you jump to our next coffee chat slide? And Renata, I just want to personally, truly thank you. It's been really a privilege to hear from you, learn from your expertise and your experience. It's a very specific topic. And so just having the opportunity to hear from you is really an honor and a privilege. So thank you so much for your time.
Thank you. My pleasure. Thanks, everyone.
And everyone, please bookmark May 6th for your next coffee chat. We look forward to seeing all of you there in about a month's time. Thanks for tuning in. And thank you again, Renata. We'll all be in touch very soon, I'm sure.